channel.
Let's talk on transfer pricing.
So in the last video I made, I gave an example on manufacturing accounts, and I said in the next video I'll treat transfer pricing, which is still under manufacturing accounts. So transfer pricing basically is just like a net realizable value, which will enable a manufacturing firm get a gross profit on manufacture. For example, you get your cost of production, which is the cost you use in producing a particular good, and then you want to add your profit on manufacturing. Like, you don't want to sell it at that cost of production, you want to add your profit on manufacture. So then you look at what is being sold out in the market, because you might actually produce a good maybe worth 500,000, but in the market it's being sold 700,000. So that 200,000 difference will become your gross profit on manufacture. There's gross profit for trading, but without even selling, you've already made a profit on your manufacturing, which means you to produce it actually took you lesser to produce it yourself rather than going to buy it and resell. So if you produce it yourself, you save yourself 200,000. I think we all understand.
So everyone, this is the illustration which we are going to treat in this video.
So I've already written this. This is a work example. I want to treat a work example on the transfer price. It's still the same thing with manufacturing account like in the previous one, but here it's just transfer cost. So I'll be showing how the transfer cost slash transfer pricing is being illustrated. It's all them are the same: transfer pricing, transfer cost. So don't let this confuse you. So in the question which has been shown rather, we solve it now. So we're giving stock on 1st of November, manufactured goods and raw materials, but remember what we need in the manufacturing account are raw materials. So opening stock of raw materials in the question 3,000. So that's why it's written here. You look at it, there is written 3,000. Then you add, as usual in the format, you add your purchases of raw materials. You put it under this naira. Remember I said that this 2 naira sign, this here is for illustration, then this one is for already gotten figure that doesn't need adjustment. So it's 7,260. Carried in word, you check your question. Carried in word on raw materials is 3,410. 3,410. So you also add it. Then cost of, when you get that, you add it. When you add it 7,260 to 3,410, you get 90,670. So you now add it to this 3,000, which will then give you 93,670. Then that will now become your cost of raw material available. Then the next step, as the format says, remember I've given the formats for this manufacturing account in one of my videos. So if you haven't seen that, you can just go through my videos and you'll see it. So you let your closing stock of raw materials, that's 2,000. You get your cost of raw materials consumed. Remember that I said that the reason why we always less our closing stock of raw materials is to get, because this is actually your cost of raw materials available. So if you don't let this closing stock of raw material, which is the stock at the end of the financial year, it will be assumed that it was consumed. So you have to less it. So you know the cost of raw materials which you have actually consumed while producing your goods. So cost of raw materials consumed. Then direct expenses, direct wages relating to the factory. Manufacturing wages. If you check the question, 110,290 naira. That's it here. Then when you add it to your cost of raw materials. Remember, that's not the only direct. You can also see royalties, you can see direct expenses, other direct expenses, but the only one given here is manufacturing wages. So you add it to your cost of raw materials consumed, you get your prime costs. After you've added all your direct expenses, remember, you get your prime costs. Then after that in the format, the next step is to get your overhead expenses. It's still related to the factory, but these ones are the indirect ones. Depreciation on plants and machinery. That's your plant and machinery. I've actually explained all of this. I don't know why every time I solve an example. It's just so that everyone can actually be carried along. Depreciation of plant and machinery. Your plant and machinery is what you use in like producing, let's say, your bread. So it needs maintenance because every asset will definitely depreciate. So you need to provide for depreciation of the plant and machinery, which is used in the factory. That's why in that factory over here, 13,000. There was no adjustment in the additional information first time. So you can actually just write it like that, 13,000. Then repairs to machinery is still an expense to the machinery which is being used. Maybe it's fault. The question, repairs to machinery, okay, it's 2,500. Then you also see factory electricity is the question, 5,790. I put them under here because they need to be added together. You can't put them here. If you put them here, it will be confusing you. So when you just add it here, then you add everything up together to give you 44,000. Factory rent and rate is also there, 22,710. So when you add everything together, you get 44,000. Then this 44,000, you add it to this your prime costs. It's good to separate all these things so that it will be easy. You won't make mistake in addition and subtraction. So after you've done that, you add this your 209 to your 44,000, you get 245,960. That will be your cost of production. And remember, I said once you've got your cost of production, you are done with your manufacturing account. So here, now we've reached that transfer pricing, whatever that I was talking about. So this is where it's applied. In the additional information, you see goods manufactured are to be posted to the sales department at net realizable value of 271,500. So to the sales department, which means it is to be sold for 271,500, but your cost of production, which you have already gotten, was 245,960. So if it is to be sold for 271,500, you have to get the difference. To be sold at 271,500, but it was produced, that's the cost of production, it was produced for 245,960. So when you subtract it, 4, 0, 9 plus 5, 6, 5, 2. Yes. So this value here will become your gross profit. That's 25,540. Will become your gross profit of manufacture. It's the same thing, sir. 25,540 is the same thing. So basically, the transfer cost is 271,500, which is to be transferred to sales department and sent in the question. That's what it is to be sold for. But you produced it at the rate of 245,960, which will then give you a profit on your manufacture, which is 25,540. So the business will be happy because they will rather keep on producing goods than buying it at a particular price, which will save them a profit of 25,540. So let's do that's it. Then I'll be rubbing this off because we've gotten our cost of production, but we were required to prepare a manufacturing trading profit and loss account. So now let's move to the trading profit and loss account. I'll rub this off. Okay, everyone. So this is the trading profits aspect. So in the question, you look at opening stock of finished goods. Remember that in trading profits we deal with finished goods, but in the manufacturing we deal with raw materials. So in the finished goods, you look at opening stock. You see stock on 1st of November, you see manufactured goods, and you see raw materials. So it's a manufactured good, which is also finished goods, 9,740. Right here, it doesn't need any adjustment, so it's be on the right hand side. Then we've gotten our transfer cost as 271,500. So you add it to your opening stock of finished goods. Then you add your purchases of finished goods. Remember that in the previous video I made, we added cost of production because there was no transfer pricing. But now that there's transfer price / transfer cost, you add it in place of the cost of production. Then your purchases of finished goods is in the question. Purchases of manufactured goods, 12,740. You write it here. It's for it's adjusting. Then your carriage inward. There was carriage inward on raw materials, but that one was for the manufacturing account. So you look for the carriage inward on under purchases. Carriage inward is related to purchases. What's the cost you use in bringing the goods which you purchase into your business? That's like cost of delivery. That's carriage inward. So question is 500. Then it will become your cost when you add everything. When you add these three together, it give you 284,740, which you then add to your opening stock of finished goods. Then you get 294,480, which will become your cost of goods available for sale. All these terms, they're in the formats. I hope we have all memorized our formats. It should be easier for us in solving. Then you list your closing stock of finished goods. In the additional information, sometimes the closing stock might not be in the question, but it could be in the additional information. You see, the stock contains 1st of October 1993. Manufactured goods 27,940. That's it here. So when you list it, you get your cost of goods sold. Then your sales. In order to get, you cannot get your gross profit without getting your sales. So your sales, this is just a solve. I've solved it already, so I'm just explaining. You can't actually be solving it. It take a lot of time. So your sales, in the question 299,420. So remember that how to get our gross profit is sales minus cost of goods sold. So your 299,420 minus your cost of goods sold, which is 266,540, will give you 32,880. So when you add it, you balance that. Then we move to expenses side. We got now gross profit, we're done with trading. So now let's go to profit and loss aspect, which is this. So your expenses, you see discounts allowed. Discounts allowed 3,740 in question. They don't have any adjustment, which makes it easier for us. So 3,740. Office rent and rates. Remember that there was also factory rent and rates, which was related to factory, but now this one is the office. I said that this one is what takes place in like selling office aspect, like lighting and expenses, offices. But there's also factory rent and rates, which is related to the factory, but that won't be under factory overhead, which is already determined. So office salary is 9,400. These expenses, they are just basically admin expenses, but those other expenses manufacturing are just factory expenses. So office salary is 9,400. Question here. Then carriage outward. Carriage outward is an expense. 2,330. So let me quickly wipe this off and finish up the profit and loss aspect. So everyone, this is the completion of the profit and loss account. Printings and stationery is in the question is 930. So you write. So general expenses 3,170. This expenses side is just other related expenses that does not relate to the factory directly. You understand? It's just like administration expenses, general traveling, other expenses that are incurred in running that business. Traveling expenses 2,790. Question, 2,790. General expenses 3,170. So remember, it's a profit and loss account which involve expenses and revenue. The debit side being the expenses side, then the credit side being the revenue side. So gross profit brought down. We got our gross profit on trading. We got it as 32,880. So you bring it down as revenue. Remember, it's a revenue, so you add it there. Then profit on manufacture, which we also got. Now, do you notice that in this illustration we have two gross profits. The first one we got was gross profit on manufacture, which we derived through our transfer costs. Profit on manufacture. Then we now also got our gross profit on trading, that's on sales. So in transfer pricing, you usually have two gross profits, unless maybe maybe you have a transfer pricing there in your trading account, you get a loss, because it's actually possible you can actually get a gross loss, but it will be on your expenses side because you need to pay for it. It's not a gain to the business. So when you add it, you get 58,420. which will then less from addition of this and get your net profits. So think as we've derived our net profits and that's all. Because I said that when we get our cost of production, it means we're done with manufacturing. When you get your gross profit, you're done with your trading profits, your trading account. And when you get your net profit, you're done with your profit and loss account. I hope this is highly understood. If you have any question, don't forget to just put that down in the comment section. If you also have any correction, because I said in my introductory video, we learn together. I actually make some mistakes, or you guys can have a contribution or addition to what I should have actually taught. So please don't forget to subscribe, share, and like. Also comment. Just comment anything. Let me know what my viewers think of this video. Alright, bye and have a nice day.